Hi, this is Paul in New Hampshire again. Today I'm going to talk about gold pricing, the commodity price versus the bullion or currency price. This was an area that I didn't know about until I asked the questions and started doing the research. So basically, the price that you see in the papers all the time, the price of gold, that's the commodity price, okay? That price, basically, nobody can get gold at that price unless you buy it as a commodity through the markets and stuff. It's equivalent to, and I'll be using this example because I think most people will understand this example. It's equivalent to a barrel of oil. A barrel of oil, say, is $85 a barrel. Nobody can buy that barrel of oil for $85 unless you go and buy it through the commodity markets. And then you'll never have a barrel of oil. I guess you could if you wanted to, but anyway. So that's the price of gold that you see in the paper, on the news. Gold reached $1,400 an ounce, U.S. dollars today. That's the commodity price. You then have the currency price, or you have the other pricing. There's several different ways of gold that an individual can have in their hand, and that's one is the gold coins. Most gold coins are an ounce or larger. There are some smaller ones, but there again, you won't be able to buy a gold coin, a 1 ounce gold coin, for what you'll see that's listed in the paper as to the price of gold. So then you have your other bullion. Again, bullion is 99.9% gold. It has to be at that level to be considered bullion. Bullion is a term for currency. So the gold coins that you'll see that are that bullion will always be somewhere higher than the price of gold that you'll see in the commodity market. The other levels of bullion, you get into the gram size, the 1 gram or the 0.5 gram. These will be higher than the 1 ounce size for several different reasons. But again, I'll use the oil and gasoline as an example. You have a barrel of oil, say, is $85, but you won't be able to buy that oil for a gallon for the equivalent. So you go to the gas station and you buy a gallon of gasoline, and that is $3 a gallon now. $3.10 today is what I paid for it. So that gallon of gasoline is a lot higher than the $85 a barrel divided by the 50 gallons or whatever it is per gallon. That's the same as the gold bullion. The smaller quantity of the gold bullion, the higher price is going to be in reference to that. Now, just like that gallon of gasoline is tied to the commodity price of oil per barrel, that bullion is going to be tied to the commodity price of gold. So even though that 0.5 gram bullion is going to cost you more per ounce than the commodity price per ounce, it will track the commodity price. So you'll always have that value in that bullion. Now, again, going back to the comparison with oil, say I went and I bought my $3.10 gallon of gasoline today. I could hold on to that gallon of gasoline and for however long I wanted to hang on to it, and maybe down the line sell that gallon of gasoline to my neighbor for $3.50 a gallon. depending on how the price of gasoline went up. I wouldn't be able to go to the gas station and sell them that gallon of gasoline for $3.50 a gallon. I could possibly sell them that gallon of gasoline for the price that they're paying for that gasoline at that time. So the $3.50 that the market has, I may be able to get from that gas station, or sell it back to that gas station for $3. Okay, that's the same way with the KB Edemetal opportunity. Is that today we can buy a gram or 0.5 grams, whatever our choice is, of the gold bullion, which will be a higher price than taking the commodity price that's on the market and dividing it by however many grams, 28 point whatever it is. And the same way with selling it back to KB. We'll get the price or close to the price of gold, but we'll never get that full price because they're the wholesaler, they're the gas station. Okay. Now, as far as currency though, we could take that gram or 0.5 grams of gold and take it to our neighbor and always be able to convert it to whatever the market is at that time, unless we want to give them a discount. And that's the difference between the gold price at a commodity level and gold price as a bullion. Now, the other advantage to having a 1 gram nugget embedded into a card, or a 0.5 gram embedded into a card that's registered with a serial number, versus having a gold coin that you paid $1,400 or $1,500 for, is it would be very hard for you to take that gold coin to your neighbor and say, hey, can I trade you this gold coin for $1,500? Chances are they'll probably say, no, I don't have $1,500. Or take it to your local grocery store and say, I want to buy, a loaf of bread. Here's my $1,500 coin. They'll say, I don't have change. Or how do I know that that's even a real coin? It's hard enough to go to the stores here in the States and give them a $50 bill, much less a $1,500 gold coin. However, with what KB Edemetal has, with the 0.5 grams, those will be worth, again, I won't quote a price, but a lot less, say $40 or $30. Then you could take that to the store, which they do all the time now in Germany, and say, okay, I'm going to trade my gold here for my bread and my sodas and stuff like that. So that's the advantage of the KB Edemetal opportunity. And again, I hope that explains the difference between looking in the paper and saying, hey, gold's $1,400, why am I paying $65 a gram? Or whatever the prices may be. That's the difference. It would be like going to the gas station and saying, hey, price of oil is $85 a barrel, why am I paying $3.10 a gallon? It's the same comparison. So I think if you look at it that way, you may solve some questions and some issues as to why a gram ingot of bullion is higher than if you took the commodity price of gold, divide it by the grams, and come up with a gram price. And again, the smaller the ingot, the easier it is to transfer it as currency. It's just like the American dollar. The higher the denomination, the harder it is to find somebody to accept that. Many smaller stores will not accept a $100 bill because, one, they don't carry that much change in the drawer. They always have to now mark it with a pen to make sure it's not counterfeit. So, think of that as going out and buying a 1 ounce gold coin. How easy would that really be to turn back into a form that you could actually use? So anyway, this is Paul in New Hampshire. I hope that answers some questions and shed some light on the issues as to the difference between the gold commodity price versus the gold bullion currency price, and why the levels of the smaller you get, the higher price that you'll pay for those. But that price, again, will track whatever the price of gold is. One other quick little point on that is that you know, a case of beer is cheaper than a bottle of beer. The other thing, going back to the oil issue, you know, if I buy a gallon of gasoline, it's going to cost me more than if I call that gasoline company up and said, "Hey, can you deliver 200 gallons to my back door?" So anyway, think of what we're into in those terms, and I think you'll understand a little bit more the issues as to pricing, the conversion rate, selling it, you know, buying it from KB Edemittel, selling it back to KB Edemittel. You know, the best way to do it is not to sell it back to KB Edemittel, but to use it as a currency, to hang on to it. This opportunity is really not a short-term investment, so it's more of a long-term, lifelong pursuit that we're converting our dollars or other foreign currency into a gold savings account. So anyway, okay, have a great day. This is Paul in New Hampshire, and blessings to all.